Leaked: the downfall of FTX. FTX was worth $32 billion on the morning of November 22, 2022. But in a flash, everything went crumbling down. Investors have written off what once appeared to be the next big thing in technology due to the bankruptcy of the crypto behemoth, FTX. Its founder, Sam Bankman-Fried, also resigned. This took only a few days to happen. Such a collapse, though, can be challenging to understand in the intricate world of cryptocurrency. But today we'll run through everything that went down. Hey, welcome to Stock Market Mate. Today we'll talk about the FTX crash, what exactly happened to FTX, and how worse it can get. Before we get into it, subscribe to the channel and hit the notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. What is FTX? FTX is a digital currency exchange, a platform where people could buy and sell digital assets like Bitcoin, Dogecoin, and Ether. Such platforms rose in popularity in recent years as more people look to invest in cryptocurrencies without the hassle of dealing with the technical side of such transactions, such as setting up a crypto wallet. The company, founded in 2019, quickly rose to international prominence through a series of high-profile acquisitions, aggressive marketing strategies, and low trading fees. Competitor platforms include Kraken, Coinbase, and Gemini. Even those unfamiliar with the technology were lured to FTX with promises that they could park their money in accounts and earn much higher yields than at traditional banks. Major venture capital groups also bought in, investing almost $2 billion in the company. Sam Bankman-Fried, FTX's 30-year-old founder, became the face of the company and to some, crypto at large. Celebrity endorsements and major sports sponsorships made FTX hard to miss. First, major red flags. Soon after Bankman-Fried launched FTX, the cryptocurrency market took off. Bitcoin's price, which had previously fluctuated around $10,000, skyrocketed in 2021 and reached a high of moreover $64,000. Venture capital funds poured into anything blockchain-related and digital currency-related, and crypto platforms shifted to draw users beyond the technologists and blockchain enthusiasts who had previously propelled its ascent. The price of Bitcoin, which is sometimes used as a proxy for the overall cryptocurrency market, has fallen sharply from its highs in late 2021 and is currently trading at about $16,000. This pattern was adopted by other crypto and token values. Many significant platforms had already closed due to the general slump in the crypto business, but FTX appeared to be immune, even going so far as to acquire some of its faltering rivals. However, earlier this month, a cryptocurrency-focused digital media website, CoinDesk, disclosed the balance sheet of Alameda Research, a crypto investment company that was also controlled by Bankman-Fried. It revealed that Alameda had a substantial amount of FTT, a virtual currency developed by FTX. Even though the FTT had a particular market value, Alameda would be in danger of going bankrupt if the price dropped. Changpeng, CZ Zhao, and FTX. After Alameda balance sheet was leaked, Changpeng, CZ Zhao, CEO of the crypto platform Binance, a rival of FTX, announced on November 6 that his company would sell off all its FTT tokens. The price of FTT dropped sharply. As the price dropped, many FTX customers moved to withdraw their assets from the platform. Though the extent of the connections between Alameda and FTX were not yet public, a series of recent crypto platform collapses had already put the crypto community on edge. Another dilemma about hackers. Everyone is worried about hackers, and there are major disputes brewing about how to handle customer data. FTX has been, and continues to be, the target of cyber attacks, and that is complicating its lawyers' work. Since Ray took over the company's operations on November 11th, he and his team have struggled to access to customer data due to ongoing security risks, according to Brian Glueckstein, another lawyer representing FTX. There was also disagreement among lawyers for the company and its creditors, and the US trustee monitoring the proceedings over customer data. FTX has millions of customers, which Glueckstein called the lifeblood of the company. He argued its customer database is valuable, and for that reason, that information shouldn't be made public. FTX also asked Judge John Dorsey to allow the company to submit redacted lists of its largest creditors, citing concerns about their privacy and safety. But Ben Hackman, an attorney representing the US trustee, argued against that, suggesting that information should be made available with only a few exceptions in the interest of greater transparency. How worse can it get? What wasn't yet known was how closely Alameda and FTX were connected, or how bad things had gone for Bankman-Fried's businesses. In the days that followed FTX's decision to halt withdrawals, Those linkages, as well as its financial difficulties, started to become more apparent. Anonymous insiders told media outlets like Bloomberg, the Financial Times, the Wall Street Journal, and others that FTX required $8 billion to make up the difference between what it owed and what it could pay out. NBC News has not verified these reports, and Bankman-Fried said in an interview Monday with a Vox journalist over Twitter DM that he needed to raise $8 billion in the next 2 weeks to make things right with the account holders. Alameda was said to have utilized FTX funds for trading, according to the Wall Street Journal and CNBC, both of which also cited anonymous individuals. In the Vox interview, Bankman-Fried added that he felt Alameda had enough collateral to cover the transfers, appearing to confirm rumors that money had been transferred between FTX and Alameda. Soon after, blockchain specialists saw the transfer of $400 million in assets from FTX accounts. However, the reason for the transfer remained a mystery. Bankman-Fried refuted claims that money had been covertly transferred from one company to another in a string of texts to reuters. He attributed the transfers to a labeling error that occurred internally. FTX's current CEO, John Ray, who assisted Enron through its corporate bankruptcy procedure in the early 2000s, claimed in a court filing that it is challenging to determine how and why the company's money was managed in the manner they were. That's because FTX and its affiliated companies are accused of breaking accepted standards for financial reporting. Normally, a business produces balance sheets several times a year that provide reliable information on the company's assets and liabilities, among other things. But the balance sheets of Bankman-Fried's firms were never audited, according to the company's bankruptcy court filings, meaning there is no reliable account or paper trail of what money the company had and where it went. Ray called FTX's poor management and financial opacity unprecedented. Never in my career have I seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here. According to Ray, the corporation has only so far recovered a fraction of the $740 million in Bitcoin held by the many businesses that made up FTX and Alameda. Bankman-Fried's grasp for a lifeline. Before the full extent of the crisis became public, and desperate to keep his companies afloat, Bankman-Fried grasped for a lifeline as signs of a broader crypto crash loomed. Zhao, one of FTX's first investors, stepped in to make a play for his former rival. On November 8th, he announced that Binance would purchase FTX for an undisclosed amount in what would essentially constitute a bailout for the beleaguered firm. But Binance quickly backed out, with Zhao reciting reports that FTX had mismanaged user funds and information gleaned during the standard due diligence process that accompanies such deals. Bankman-Fried has acknowledged the company's problems on Twitter, where he remains active. On November 11th, Bankman-Fried stepped down as CEO of FTX, and the companies he oversaw filed for Chapter 11 bankruptcy. The Wall Street Journal and the Associated Press, citing anonymous sources, have both reported that FTX now faces investigations by the Securities and Exchange Commission and the Department of Justice. NBC News has not verified those reports. And that's about it for today's video. If you found this video helpful, kindly click the like and subscribe button. Also, you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!